Greetings all, Ben here from East West. Just going to take a look at what has been a stellar week in uranium. Amazing rally. Certainly it's blown some of my ideas out of the water, so that's all right. We just, when that happens, we recalibrate, we take a fresh look, and we see what we can see. So, yeah, we'll take a look at the ETFs in this video, and just as a quick note, this will be... I'm going to do another video today on some of the stocks, but this will be my last set of videos for a couple of weeks as I take a bit of R&R with the fam. So that'll be a good chance to let the market shake out, and then when I get back, I can have a bit of a look at what's going on. But with all that being said, let's jump in and have a look at the charts. So I think the first thing to do here, just as we start with URA, is to look at the big news today, which was Kazatomprom has cut its 2024 production plan due to difficulties with sourcing sulfuric acid needed for production. So that's pretty good news. I would have thought that is just going to tighten supply even further, and the market has responded accordingly. So good news, certainly for the holders. So let's see what that all means and what's happened. So URA this week, 15%. Nearly 15.5%. That's a pretty good rise in a week, right? And it's busted through a lot of the areas that were troubling me somewhat, and it's forced me to shift my view a little bit. I did think that maybe the market, because of the way it was struggling up here, that maybe it was going to. I mean, this correction's been very short and very sharp, and you know, it's since been broken very, very quickly. So I sort of thought maybe a correction was in the offering, and maybe we got a little one here. But this week has obviously blown a lot of the ideas that I had away. So that's all right. That's fine, mate. What you do is when the market reacts, you just adjust your view. And I think I've been saying the whole time is that even though, you know, saying correction, well, you know, the only thing you really need to worry about, right, is the trend, and the trend is still going up. So while the trend is your friend, is the old saying. So you just keep riding that trend until it gives definitive signs that the trend is running out, and we've never had that. All we do is look at tops and say, what's going on here? Is there something we need to be aware of? Well, we sort of had that, but the market has allayed those fears. I'll just say it like that. It was certainly allayed the way that I was looking at it. So this week's big surging rally, I think we just poked through. It's almost as we close out the week a double top here, which isn't to say that that's going to be where the market stops, of course. But that's just a point of interest. So, you know, that what we do, or what I do, is when we get to these points of interest, that's when we just stop, have a look, and go, okay, so we've reached this point. Where are we at, and how does things look? Well, now when we look left on the big chart, we've just come back to this peak here. So we kind of had a double top. Do we have a triple top? Well, I don't know about that. I mean, the market's got so much steam going that I wouldn't be saying that, oh yeah, we've got a triple top, you got to sell. I mean, I'm certainly not suggesting that you sell. In fact, none of my videos, even though it might sound like I'm being overly bearish or overly pessimistic, I'm not suggesting for a second that you should be selling. I mean, I would never suggest that you do anything. All I'm trying to do is just to put together a technical picture, but, you know, this remains the overall major trend. I mean, the top side maybe not so much, but I'd just be using these connections here and going, okay, well, this is my big trend line. This would be the ultimate point of danger if we lost this, and we're still so far away from losing that. It's not funny, but I digress. I mean, now that we've sort of got here, I am kind of expecting now that the market is going to travel higher. There's no reason to be selling, and probably every reason to be buying. So what would be next? Well, I'd just be looking at this probably. So that would be sort of 37 and up to 39. That would just be the next point of call. Like as we defeat levels as we move through, we just look for the next ones and go, okay, well, this is the next point of interest. If the market can get up here, then we stop again. We have a look and see where we sit. Now, even just looking at this on a technical basis, when we look at the overall picture, okay, we just take the big retracement like that. Okay, we know we came back here into sort of the retracement zone where we held these levels quite well, and we held them a few times over a long period of time, and it was right around between the 50 and the 61. I mean, this one not so much because this low was made before this, but this stuff, okay, this stuff that was made after the initial peak has just held this sort of 50% into the 61.8%. So you just think, okay, measured move, where does that take us? The measured move takes us up to $37.18, which ties in to approaching these tops. So Not a prediction. That's just a layout, a setup, if you will. I don't think that this will pitchfork incredibly well. If you take it off this pivot, well, you'd be looking for the center line. So I don't think that's very clean. I probably wouldn't use that in this instance. But nonetheless, that is just a basic trading setup, which isn't to say that it's a guarantee. It's just what you look for. Okay, so that would be the old measured move trade, and it just ties into the next line of tops here. So what else ties in? Or what else is interesting about this chart? Well, the next thing I sort of looked at, which I thought was pretty cool, I'll just get some of this stuff off of here because we know it's there. I'll even get rid of that. But one thing I noticed is quite interesting. If you just draw from the bottom of this to the peak of that, you've got, where are we? Is that right? Yeah, we've got about 70%. We've got about a 70% angle. Okay. Now do the same thing here. It's about the same, right? So what it's saying is, the steepness of this trend is matching the steepness of this trend, or this trend so far. So they're both going at about the same sort of rate, just as that basic sort of trend angle comes into play. I mean, I think actually, if you really sort of got in there and nailed it right down, it's probably they're about the same. So that's kind of interesting, but that would sort of lead me to think, okay, well, then do we have a repeating pattern? We've got a rally, always going on about this, the correction, and then are we going to get another rally that's going to be, I wouldn't say a carbon copy, but similar in nature to this? I mean, certainly we've got a pretty good start, don't we? Right, this is an impulsive rip. This is a correction. This is another impulsive rip. So how far does this go? We'll just clean some of this back off because we sort of know it's there. So look, this is the same thing I've said before. I would expect that whatever this is going to mirror that. Okay, maybe not necessarily in time, but I would expect that it's going to mirror it in price. That would just be the expectation, not a guarantee, not a prediction. That would just be an expectation. Where does that take us? We're just thinking about a one-to-one move, like an AB equals CD sort of pattern. I've just put this fractal on here. I'm not suggesting that this pattern's going to repeat. It's more just the magnitude of the move. So, that would take us up to here. So, I wouldn't say we've really got a lot just through here. Like if we sort of beat those peaks that we were looking at through this section, well, then I would, my eye would just naturally cast back to the next sort of peak, which would, of course, be up here. So that would be, just a little bit further still. So if we were just thinking about this in an Elliott perspective, well, if we were going to get 3 waves, that would be what I'd expect. If we were going to get 5 waves, I would expect, that's just an expectation, that this movement, this one, will stretch further than this one. Now, I've copped a lot of heat previously for suggesting this sort of thing, but if I was looking for 3 waves, that would be the sort of area. If I was looking for a 5-wave movement, which would make the market go much higher, well, the areas for wave 5 would be either up here around $50 or a bit higher up here between 57 and 60. So not a prediction, not trying to excite you. I'm just saying that as the textbook sits, that's what you would be expecting. Okay, so 3 waves up to here, then the correction. 5 waves, you'd be expecting something more like that. Okay, so not a prediction. That's just how the textbook would lay out the case. So, thinking about these sort of upper areas, I mean, the stock's got to rally, 50% from here to even get that high. So I think we're a long way away from even thinking about that. But just as we look at this, that's how I'd be putting this together and thinking about it in an Elliott sense, that we've got either an A wave up or a 1 wave, a 2 wave down or a B wave. So like I said, I think the first point of call for me for now, like on the big picture, would be the one-to-one move. Okay, even though there's not a lot in there, and we've still, like I said, we've still got to just get through this would be the first, but once it got sort of round to, so maybe, and 1 to 1, I mean, it doesn't have to be exact, so maybe that sort of area is kind of where then looking at this this is weekly too, this could take a long time, but that would be the kind of area that I'd be looking at and just tying it into, the unless the trend shows us something else. I mean, you can sort of take now this sort of trend channel and take it off that peak, but because we don't really have a lot of touches on that, it's not as prevalent as the bottom, because we've got sort of 2 touches. But even this trend, even though it's very well intact, it's still not, it gets juicier if you get another bounce off it, and that's just from a technical perspective. But the more times it touches with sort of geometric precision, the better, in my opinion, at least. It's a nice strong trend. So we see that probably a bit more through the dailies, but obviously on the weeklies, that's what we've got. So just quickly looking at this a bit more up close and personal. This is still in pencil, because I think that the subdivision of this is looking hard to tell. But right now you'd be thinking, okay, well, if this was going to play like this, do we get an extended wave 5? Okay, so extended 5th waves. Well, I'd be taking this 61.8%. I'd be putting that on 4 and expecting something here, but even that feels a little bit short the way the market's going. So that leads me to think that maybe this subdivision's not right. Okay, and maybe what we're actually going to get is this isn't 3. This is part of the subdivision of 3. Maybe this is 3, and maybe this is 4. And maybe 3 still ongoing. That's why Elliot's led. Price leads Elliot. Elliot doesn't lead price. We just look at what we've got and we just adjust as we see. But the way it's going and all the news that's out there, we would be expecting higher, right? But there's probably some new trends, some better trend channels that we can just draw on a daily coming in here. So I'll just put the Elliott away, because I think it's probably handier on the bigger picture than it is here just on the smaller time frame. But this was the trend channel that I was looking at. You can see here, because we got some nice touches, and it was touch, and this formed up well. But now we've sort of busted that. So I'd be kind of, this is only a guideline, but I'd be kind of looking at just sort of getting rid of this now, because it's not quite as prevalent. And now I'd sort of just be looking at it going, okay, well, what's the main geometry? What's the good trend channel we can see here? And this was kind of one that we were looking at before, but I think this is kind of interesting because we got quite a lot of good touches through here, even though there's a little bit of slop through here, but you can't expect it to be perfect. It's, it's an art, not a science, this stuff. But the fact that we're now getting close to this, so I'd probably just look at this trend and think, oh, okay, well, can we even bust through this? Because if we bust through the top of this one, then I'd probably ditch the top of the line. I'd keep the bottom, and that would be my immediate point of call. But as things sit, so far so good. So the only thing I'd be looking at here is we've got quite the area through here. Okay, so what I like to see, I mean, this was pretty strong resistance, but we've gapped straight through it. So what I'd like to see is any retest of this area to become support. So that would be kind of good, right? To just see this sort of area between what, $29.45, $30.26. Don't take that as gospel. That's just about right. But what would be good is, I wouldn't mind to see it. I think it's probably a pretty good thing that the market comes and fills in this gap and holds this, because then the gap's filled in. We've held what was resistance becoming support, and then we can, technically you just push on further. So that's kind of what I'd just be looking at in the short term. So over the next couple of weeks, I mean, and I don't know, the way things are going, even though this has been a, unbelievable week, maybe next week it just keeps going. But I would have thought at some stage some sellers will come in, because if you don't have sellers, you've got no market. You need buyers and sellers. So, any sort of test back down to here, that would be what you'd look for, in my opinion. And maybe even if you could tie that into a Fibonacci, see something like that. I mean, I'm not trying to make a prediction that the market's going to go that high, but if you were sort of trying to draw it up in a textbook for someone, you'd hope the market to get up here to 33 and then correct back to here, test this, and then on we go further. That's what you'd be hoping for, but that would of course blow the bottom of the trend channel out. But that's cool. That's right. Blow the top of the trend channel out. But as being a bull, that's probably what you want, right? So no dramas there. But that's what you'd hope to see in an ideal scenario. But that's textbook, and real life doesn't often follow the textbook, has been proven by myself and some of my ramblings over the weeks. Okay, so let's move on to URNM. I always get that tongue twisted done. So what's the important thing here? Well, we broke this top, so we are in blue sky territory now. We're breaking out all-time highs, which is great. And coupled with that, we broke through sort of this area that the market, I'd highlighted this before, the market was just sort of struggling at. So this is where the market gathered itself, and bang, what a week. An 18% rise. Call it 9 to look, what's a percent between friends? Let's call it 20%. It's a pretty damn good week. I mean, that's an amazing bar. So that's almost going back to this sort of stuff. So that's fantastic. Well, and really congratulations to all you that have held, maintain your long position. I'm very, very happy for you. Never think that I'm not. This is fantastic. This chart looks great now. Now that all barriers are cleared, the only thing here, and this is where something like Elliott and those extensions become a little bit more prevalent, because we've got no price history now. Okay, there's no resistance. So, picking out areas of what could be areas of interest become a little bit harder because we've got no history. Okay, and that's where those projections, they're not predictions, they're just projections. If the market gets there, then we have a look at how it's behaving. Do we think there's something else going on, or are we happy to stay long? Should put it that way. So just looking at this, one thing that's great is this week is a big volume week. So there's plenty of willing buyers coming in here with lots of volume to push the market nice and strongly up. So that is good. I don't know, it sits in between. I mean, sort of these sort of moves without volume, there can mean two things, right? I mean, it just means there's a lack of sellers, but why is there a lack of sellers? There's no one want to sell because it's such a good buy, or who knows? But generally speaking, a strong volume candle, a big candle with strong volume, I mean, that's good. It's cleaned out this whole sort of zone that the market was just struggling. So whatever sellers were left here have been blown out of the water. So I think just looking at this, I mean, it's pretty simple now, right? This was a great zone, and to me, it sort of tied in with this a fair bit, this old top, and the psychological $50 mark, which we've smashed to pieces. But just like in URA, you want to see this tested from above and hold. That's the good sign. Okay, that's what you want to see. If this can hold this was such good resistance for a long time, if this now holds as support, then that's a very good sign for further bullish momentum. And in fact, I'd suggest that that's what you want to see. Okay, you want to see this area now tested and become support, because resistance becoming support, support becoming resistance is a very strong sign. Okay, in my book. Okay, some people might argue the toss there, but anywhere down into here, okay, just at these old peaks where the market struggled, this becomes support. That's great. So because we've got a bit of blue sky here and no price history, this is where those kind of projections can be helpful. Once again, not predictions, just projections to give us areas of interest that nothing else will give us because we've got no price history. So when we just look at the magnitude of this move off say the low, because I'm kind of looking at this, I'm not suggesting the shape's the same, even though it's similar. I'll show you in a sec. But depending on where you view that the correction is ending, I mean, you just think about 1-to-1. Now, just 1-to-1, a basic 1-to-1. Look, even if you took the bottom of this, and I'm not even sure where this correction ends, it's pretty iffy, but you're still talking about $70. That would be just the first point of call, okay? Just the first point of interest, and the first thing that you'd be looking for as we move in here to fresh territory with no history. That's how I'd be looking at it. I mean, I know this goes a little bit further because you could probably take, even I'm not sure the bottom's not there, but $72, but round about that $70 area. That's just what I'd be looking at, and even just looking at this pattern, and it is just that. It's just a pattern. I mean, I'd kind of be thinking that it looks similar to this. Okay. Maybe I'll just freshen that up a bit. So, in so much as, the rally, the correction, the bigger rally, the correction, and now, this sort of thing here, which was, I think, it looked like a contracting diagonal to me, but I'm not going to say anything about that. But, this sort of thing to this sort of thing after this correction, it's looking similar to me. It looks similar. Which isn't to say it's going to be a carbon copy, but this is what we talk about in Elliott with impulses, corrections, and now another impulse. And impulses are strong moves with very little chop and no overlap, and that's what we're getting. So the same thing applies here. And the question on the broader sense is, do we get the three-wave move like that, or do we get more a full five-wave move, which would be, a 1, a 2, up for a 3, a 4, and then a 5 like that. Now, just because this arrow ends at $105, I'm definitely not saying that the market is getting to $105. I'm not making any predictions. That would just be the shape that you'd expect, okay? Otherwise, if you're expecting the shape of 3 waves, you'd be thinking like that, and then you'd get some sort of correction, okay? The run would be over. So obviously we're a long way away from that, but the same thing applies here. You would just do the projections, and a 3-wave move you'd be expecting around this $70 mark. If, and that's still a massive if, we don't know, it was going to go the full 5 waves, well then you'd be looking for the third wave to be longer than the first wave, and the areas of high probability remain here between the 1272 and the 1382, or up here to the 161.8, which is around about $100, which is a very nice psychological level. But I'm not making that prediction that is how high we've got to go, because once again, you need a 50% rally. And that, look, it's not out of the realm of possibility. I don't think anyone could say that, but, that would just become our first point of call. If it could get up to around this $70 mark, then we go back and go, okay, so what have we got here? What's going on? How can I put it all together? Does this make sense up here? Is this overextended? Is the market giving me off smoke signals that this has had enough? We don't know. So we just wait for it to get up here. And the way this is going, I mean, I don't think it's going to straight line up there, but it might. I mean, who knows? The way it's going, it could straight line straight up there. But all I'm saying is that would be the first point of call. Okay, round about that $70 mark, if we can manage to get up there. But there's nothing in the way. I think I'd just say it like that. So I think just quickly looking at the trends here, the trends aren't. I can't find a lot of really nice, effective trends because there's a lot of sort of chop through. I'm not seeing anything. Probably what I'd be looking at is it's just maybe something like this forming up, but the problem is, of course, this has been blown out of the water on the top side. So maybe I just look at a trend like that, a trend line like that, but I don't know if that's hugely effective. But I'd just sort of look at that as being. I won't bring in the indicators just at the moment, but I'd look at that as being my first point of call if we were going. And once again, same thing here. I mean, all these resistant tops, okay, and then we've got the gap. So, we sort of busted through here, and we kind of tested it initially. All right, so we did sort of break through these sort of $50 tops here, and we sort of wicked into it, and then we've gapped higher. So we do have this gap. I'd expect it to get filled at some stage, be it next week, next month, next year, next decade. I don't know when, but I think if you did a study on all gaps in the market, you'll find that pretty much they all get filled at some stage. So that remains a point of call, but the same thing now, just on a short term, I'd just be looking for any sort of test. Even coming back here, that's fine. I mean, let's put a fib on this, and even from the bottom of the bottom of this the start of this run. I mean, you could probably even take it to here, but I'd probably pretty much be happy with that. And any sort of move back down here to just retest this area is good. That's what you want to see. Like I said, I don't think you want to see this. As good as this feels, I don't think you want to see it, because it's rarely, the markets can rarely sustain a move that quickly. You want to see up, down, swing patterns. Okay, you want to see chances for buyers to establish fresh longs on these pullbacks. I think that's just what leads to a healthier market that can maintain its run longer. Okay, when markets go full bull tard like that, the chances are that they're going to go full bear tard the way back. So, I'm not suggesting that this is bad. I mean, it's great, but like I said, I think what would be healthy for the market is just the pullback to test into old resistance. That would just be healthy, I think, for the market, for price, to close the gap, test resistance. The sellers test the resolve that if there all of a sudden there's plenty of buyers here, they're now psychological $50 support, then that's a good sign to slingshot further. So I'll just quickly finish here on URNJ, and look, it's pretty much the same thing. But one thing that sort of interested me here is we knew we had this area here, but the gap now, I think the retest of the filling of the gap lines with the retest of the old resistance, and that would be kind of funky to see that. And then even coming off this bottom, this would be nice. But that's not to say, because the market tomorrow could just, or Monday could gap even further for all we know. It could be further up. We could be higher. Okay, but that would be pretty spunky. That would be like technical perfection. I would think this is probably, just looking at it, looks like 1, 2, a 3, maybe a 4 or 5, like just a little one like that, and then maybe just like this. I mean, that would be great. That's what you'd want to see, quite frankly. That's what you want to see. If you see that, then you're probably pretty sure that you're on the right path, especially if this holds and reacts very quickly away from it in a strong manner, because that would be like 3 of the third. That would be the strongest move. So, that would be the kind of thing you'd be looking for. But of course, what you look for and hope for is often not what the market gives you. So you just deal with what it gives you. But right now, we've had these tops. We conclusively gap through them. So that would be just my point of call, to fill the gap, right? And hopefully have that line up with some other stuff like some Fibonacci or something like that. So look, I'll just leave these ETFs here. I think this has probably just gone on a bit longer than I want. But that's how we look, right? So we've gapped away. We've got a bit of blue sky. Or we can really go off on some of these other, not so much URA, but URNM. We just go off our projections to give some foresight into areas where we might stop to have another look. But I think the overall thing here is just the trend is your friend, and that trend is just ongoing. There is just no reason to get out of the market at all. All we need to do is read the corrections. Once they get in the rear vision mirror and we move through them, we can sort of label them off and go, okay, yep, that was good. That was just a cycle of correction, and now we're on the next cycle of running, which I think we are across the space. So once again, congratulations to all you people that have held. Enjoy your winnings, and I'm going to do another video today on some of the stocks. But if you don't watch that one, I will see you in a few weeks, and we'll see what the market has thrown up between now and then. So thanks for watching. See you next time.